Welcome back. SBI Cards, that's a company that got smacked back on Friday, post a weak set of numbers. To understand what's the outlook from here on, we're joined by Mr. Rama Mohan Amara, the MD and CEO at SBI Card. Hi, Mr. Amara. Morning. Thanks so much for joining in. Well, I recall when we chatted a few months ago, you were telling us that revolver as a contribution should be steady at around 33% on. That's come down to around 24%. So what's the way ahead on this? Where does the contribution go to? Point number one. Point number two, on your margins. You know, the system only has seen an increase of 190 basis points. Your costs haven't gone up by so much. So what do you expect the NIMs to be at going ahead on rough number?
Sorry, the volume is very low. I'm not able to hear the question.
Is it better now, Mr. Amara? Is it better now?
Slightly, but still,
am I audible?
The volume has come down.
Am I audible, sir?
Can you hear me?
But pretty low, pretty feeble.
Okay, Mr. Amara, can you hear me?
No. Okay, all right. We'll come back to you. We'll come back to you, Mr. Amara.
Maybe we speak to Mitesh first and then get back to SBI Cards, because the market at this point in time has retained most of its early morning gains. So maybe a technical check is called for. Yeah, Mitesh is with us. Mitesh, thanks a lot for joining us again. What stocks or index are you picking up?
Yeah. Although the market is, opened strong and has remained strong. With a mild blip though, I think that's not a big one. But Titan is something which is hit a fresh high. So that's a buy. Keep the stop below levels of 27.40 and look for targets of around 28.30, 28.50 on the upside to begin with, and maybe even higher levels eventually. The other stock which I like is ITC. After a few days of consolidation, it's moving up on the upside. It's moving on the upside, so that's a buy with a stop at 346 for targets of 360.
Okay, got that. Thank you very much. Anything on the short side at all? I mean, Bandhan has lost a lot. Intellect Design, no shorts for you, Mitesh?
Yes, so I think Intellect is clearly broken down with a big gap, and my only worry is that if you short it down 10% lower, you might actually see some kind of a pullback and you might get stopped out. So it's not a very good risk reward entry point, but otherwise that's a stock which I think will head lower in the coming days and maybe head towards 400. Same case for Bandhan, down 8% already, so not the best level to initiate a short position, right?
Okay, we'll leave it at that. Mitesh, thank you very much indeed for joining us, and of course we'll touch base with you later in the morning. We will be getting the SBI Cards management in a minute now. Just wanted to develop on the revolver credit point that Nigel was making. Basically, for a credit card business, revolver credit is extremely useful because these are people who are not paying up and they are continuing to revolve their credit. They are charged higher. So that is directly related to the margins that the company can post. And therefore, for SBI Cards itself, the revolver credit had actually declined. They used to run as high as 45 in Q1 last year, and now it's fallen to, in the Q2, down to 24%. So, Nigel, I think we have Mr. Amara with us. Yeah, go ahead.
All right. Lata, it's basically maybe pre-wedding I was, in that category, the revolver. And now, in fact, you're just a transactor because it's not too much money to spend. Mr. Amara is with us. Hi, Mr. Amara. I hope you're audible now. 2 points I wanted to focus on. One is on the revolver as a percentage of your total business. It used to be 35, 40, 45% as well. You were guiding for it to be a third. It's come down to around 24%. What's the trajectory going ahead? And in that context itself, what does it mean for your margins from here on, which have come down drastically? Go ahead.
Yeah, thank you. Thank you, CNBC, for giving me this opportunity. Particularly talking about the 2% decline in September quarter in revolver from 26 to 24% is more a play of build-up in the transactor NEA. Particularly during the last 10 days in the month of September, we garnered a lot of festive spends. This has an effect of elevating the NEA. Most part of it will come back as the customer pays off. Some part of it, of course, will revolve, and some part of it will get into EMI loans, giving some incremental income. So this is a more of a base effect, at least as far as the September quarter is concerned. But having said that, if we normalize it, it's still hovering around the same range, 25 to 26%. That means the revolver has been stagnant, which is in line with the industry. I mean, the trend at SBI Card is no different from the industry. In terms of taking steps, what we are taking, we have been actually exhibiting better risk appetite. We have loosened the filters based on the comfort that is available in the credit cost a couple of quarters back. Slowly, we started permitting the more of self-employed kind of customers who have better propensity to revolve. But definitely, it's taking time to catch up. So we are optimistic, but definitely the pace at which we were expecting has not materialized. So,
but credit cost is still high, no? If you're going to start even more riskier clients who are self-employed, what is your credit cost guidance? At 7.2, it's still high.
The credit cost, gross credit cost, if you look at for September quarter, it is at 6.2%, which is like a 60 basis point increase as compared to 5.6% in the previous quarter, June quarter. Again, for the same reason, like because we garnered a lot of festive spends in the last 10 days of September quarter, stage 1 assets got built up, for which in terms of accounting norms, we have to provide it at a 1.7%, which in annualized terms is almost like a 6.8%, when most part of it is likely to come back by way of payments, with the benefit of even reversing if the base declines, if the NEA base declines by December quarter.
So you're guiding for a credit cost of how much then in the second half? From 5.6 it can go down to?
Pre-COVID period, we were operating it between 6 to 6.5%. So we are confident of keeping it below the pre-COVID cost in the long term.
Right. Just a word again on your revolving credit itself. Revolver rate, you said that has been around 24 to 26%. It hasn't increased the way you expected it to. You are taking steps out there. Can you give us a bit of a timeline as to by when do you expect it to hit that 33% mark, or is it not likely to hit that 33% mark in the next 12 to 18 months? Can you give us a sense of the timeline?
Well, it's difficult to when you kind of mention the timeline by which it will happen. But some of the trends what I've seen is the revolver in absolute amount has been increasing quarter on quarter. Of course, it has not kept pace with the growth rate of NEA, but otherwise absolute amount it has been increasing. And even internally, when we did some analysis, I think the percentage of customers in terms of number of customers who are opting for revolvers has more or less remained stable in the last 1 or 2 quarters. So I can only presume that actually we are taking the right steps, and it will eventually result in a kind of increase in the revolver over a period of time.
And what does that do to your NIMs? Because your NIMs at 12.3% are the lowest that we've seen for the company in the longest time. I mean, peak, we've seen numbers over 19% as well.
Yeah. NIM is, I think the NIM compression of around 80 to 90 basis points, what we have seen in the September quarter, is more a function of increase in the cost of funds. In fact, the cost of funds increased from 5.1 to 5.4%, but actually if you normalize the base and remove the base effect, actually it has already reached 5.6, 5.7% as of September. That means we have seen around 80 basis point increase in the cost of funds for a couple of quarters, during which period the repo rate has actually increased by 190 basis points.
Yes.
So with the majority of our funding is based on like a short term and drawing bank lines, where the interest rate is linked to the external benchmark. As and when these benchmarks get reset, we will see the transmission happening. But at our end, we also have some avenues to pass on or transmit the rate increase to the customers as and when we make new disbursements. So directionally, NIM may get compressed some more. But in terms of taking steps, definitely we are taking steps to partially mitigate the impact.
Okay. Amara, we are out of time. Lots more questions. We'll try and invite you at a later date after the earnings rush. Thank you for joining us.
Thank you.
Okay, a quick check on the commodity markets now. Manisha is waiting by.